Welcome to episode 33 of Accessible Finance, where we demystify personal financial topics and answer your questions so you leave saying, I get it now. I'm Eric
And
Johns.
I'm Rachel John.
Let's dive in.
All right. So, Eric, recently I came across a Facebook post.
Okay, those are always great. I love them. Talk to me about it.
Well, so everyone's wrapping up tax season, right? And so somebody had filed their tax return and they were really frustrated because their refund, or there was no refund, they
Okay.
owed taxes, they owed penalties.
Uh-oh.
Yeah. And they could not possibly have more withholdings based solely on the way, like they filled out the W-4 and claimed nobody.
Okay.
Despite having kids, just claimed
Claim
nobody.
zero dependence. Got it.
Correct. So why was that insufficient? Why did they still owe money?
Very likely. Well, I have not seen their return.
Sure, nobody had, right? So we're going based
Right.
off of,
So
yeah.
my first suspicion is that they sold capital assets or had significant interest and or dividends that were paid to them.
Yeah.
So they have an account that is not just their checking account receiving their paychecks from their W-2. So it's very likely that their withholdings were sufficient for their wages, right? For their employee wages.
For only the W-2 income.
Exactly. But there are a number of other sources of income that they probably had. In this case, I would expect that it was capital gains via dividends and or security sales and possibly interest income as well.
Okay. So their thread continued, right? So there were lots of questions. So added to that thread, that was one of the questions that was asked after some internet sleuthing people came out of the
Okay,
woodworks. And it turned out that indeed there had been withdrawal from a brokerage,
got it.
but the withdrawal amount from the brokerage was, let's say, about $5,000.
Hmm.
Okay. Um, there was no like tax or anything paid with that. So then it makes sense
Okay.
that they would have like capital gains tax there. Yeah.
You're saying just a withdrawal from the broker. So if I have brokerage
Yes.
account, I put cash in there and I leave it in cash and then I take the cash out, there is no taxable event that just happened.
No, I'm sure that some stocks were liquidated.
Got it.
Okay. So there were definitely capital gains. It was not just like a holding place for cash.
Okay.
But I think that's a really good point. So good
Thank you.
clarification. Yeah.
Wow.
Well
All
done.
right. Say that
Well
again.
done. So yes, I think that it's um
Oh, can I make one other point real quick?
sure. Can you?
I'm gonna try.
Okay.
So the premise here was that we could not have additional withholdings in our W-4. And then we clarified that we claim zero
Yeah.
dependents. You can't really claim negative dependents, that's true,
Yeah.
but you can specify an additional dollar amount withheld. For example, if I'm W-2'd for like maybe $30,000, maybe I make $30,000 a year, but I have another like self-employment income side business and I'm making, I don't know, 70K or so. So I don't want to make estimated tax payments. I want to withhold a ton. I can have my employer withhold essentially my entire paycheck. There's no
Mm-hmm.
limit. So I can put the nominal amount of extra withholdings to
On the
like
W-4.
yes, to my entire paycheck for my W-2. So I will, instead of owing, taxes and everything else at the end, I might actually even get a rebate if I withhold
Mm-hmm.
enough taxes or a refund rather.
Mm.
Again, we talked about the fact we've talked
That's not the ideal
ad nauseum about the
situation.
fact that you're not trying to get a large refund.
Sure.
But I could cover my tax consequence because I'm going to have self-employment income and everything else, even if I'm only making 100K.
Correct. So I do want to circle
So
back
anyway,
to
you can always just increase your W-4, even if they're like, "Well, I have it at zero. I can't go any higher." Well, yes, you can. That's my point.
right, right. I think that's perfect. And I think we'll circle back in a bit to penalties and why someone might have penalties. And I know we've talked about it briefly, but it's probably very salient right now as people are looking at their tax returns or refunds.
Right.
So it turns out, right, that the person who was on Facebook said that they had withdrawn like $5,000 from, like liquidated and withdrew or took $5,000, right?
Hmm.
Capital gains tax.
Got it.
Um, Based upon the details we had on Facebook, I think it's a safe assumption that the capital gains tax rate that they were paying was lower than their like effective tax bracket.
Okay. Well, it always is.
Oh, well, there you go. So definitely safe to say. So I think then the thought process was, okay, well, if I'm claiming no dependents, but in reality I have kids,
Hmm.
why would that difference not cover up?
Substantiate it.
Right.
I mean, it depends on the quantity, the magnitude of the actual stock sale. Like envision a scenario where I sold $100 or I generated $100 of capital gains
Yeah,
in
yeah,
stocks, and I'm in the 15% bracket, so I have $15 of tax that I've
Right.
incurred. Not a big deal. Probably going to cover
Sure.
that with my W-2 withholdings. Now envision a scenario where I've sold, $100,000 and I have $15,000 of tax incurred. A little bit different, right? And I probably am not offsetting that by
Right.
claiming one less dependent than I actually should.
And I think they're actually in their thread somewhere in there became this discussion about capital gains versus ordinary income tax. And there was one person on there who was initially confused and thought that it was ordinary income tax and then capital gains on top of it. So then a whole discussion ensued, like a side thread about how if you know you're going to have to pull money out, you should never put it in the stock market because then you have to withdraw and pay extra tax on it and so on and so forth. Thoughts?
Oh, too many. Too
Yeah.
many. Oh, I was getting all excited to get granular on the ordinary income capital gains discussion, and you said some person was saying that capital gains sit on top of ordinary income,
Hmm.
and they always do. That is definitely true. They are not in addition to like you won't have ordinary income and capital gains on the same dollar, though. I think that's what it was that essentially what
Correct.
they were alluding to.
Correct.
Yeah, that's wrong
And
for
so I
sure.
think it was, so then the original poster ended up saying, well, why would I ever put,
You can have to be clear, you can have it on the same asset when you're doing something like depreciation recapture. I don't want to confuse anybody here, but not at the same time on the same dollar.
I
Does
feel
that make
like
any
if
sense?
you
I
were
know,
going to
I know.
confuse
It's
them, you
too
just
granular.
did
I
it.
just did. I just did. I just did. It's fun though. It's fun.
But yeah, so then the idea becomes like if I have to pay capital gains tax on what I liquidate from my brokerage, why would I keep stuff in brokerage? And we hit on that when we said that the capital gains tax is lower than your ordinary.
Correct. It is lower. I mean, I don't disagree with them about the holding period mattering,
Yep.
and you don't put things in stock because you're looking to withdraw it later. But the thinking that the reason you don't do that is because stocks will go up too much and therefore you'll have to pay too many capital gains is
I don't think the
silly.
thought process was that the stocks would go up too much. The thought process was on top of the 24% that I'm paying for my ordinary income, like on this dollar,
Okay,
I'm also paying like 15% capital gains. I think the thought process was that I'm paying a 39% tax on
got it.
my.
Not correct. Okay.
So that seems to be just a
It's
misunderstand.
also it's also true that you have autonomy in this process. You have control over when you're going to realize capital gains. Again, depending on your investment, but it's very likely you won't have control over when the dividends are paid. So if you're in a like high dividend yielding ETF or something like that, then you won't have control. They're going to spit it out at you. Same with interest
Yeah,
income, right? So if you're in a money market, you can't tell them, "Hey, don't pay me," or you can't tell the IRS, "I don't want to owe taxes on this right now. Let me just wait till later."
yeah, let's
Again, we're
postpone.
all of this is talking about taxable accounts, tax deferred and tax free accounts. Different story, different ball game. Very, very
Previous
different.
podcasts on it.
Yes, very many of those, and there will be plenty more, I'm sure. Right, but we're talking about, my point was just you're gonna pay tax on the dollars that you're generating in income.
Mhm.
You're gonna put them in your brokerage account. Maybe, yes, like, even if you're in VTI or a broad-based US market ticker, you'll pay, like, 1% because they're
Yeah.
gonna generate, like, 1% dividends. Um, they're gonna throw off 1% of dividends or
Mhm.
so, but it's not gonna be it shouldn't move the needle too much, and you'll get to choose whether or not you sell it, and when you sell it, you're gonna have hopefully, if if the market has grown since you
Right.
purchased it, that's when you're gonna incur the large capital gain. Right, so
Correct.
you should get to control it. You should know which your taxes are gonna be. I understand that most people aren't
Well,
really
I
fans of
don't think
plugging
the
into
average
software.
person
Yeah, they don't wanna
knows.
right.
I don't think that they do.
It's
But
fair
I
to
think that
say
I think a fair statement would be that
you
you
could
can
it's
know.
knowable.
Right.
Right, right.
Right, right, right. I also, so okay, after this entire conversation has happened and they've been steered back into the boat of like, yay, capital gains rates are still better than ordinary income
Okay.
rates. Like we're not
They're
angry
on
about
board again,
this.
okay.
Okay. Then it came out that the um amount that was pulled from the brokerage was about $5,000,
Okay.
but the tax bill that was owed was more than that.
Right. Ooh, I like this. This is a good point.
Yeah.
And it's funny to me, like, I've never I just don't think about it from this, like, I guess the layman's perspective or
Yeah.
lay person's perspective. So, what you actually take out of your brokerage account is completely irrelevant from a tax perspective. Does that make sense? So, like, I could have $8 million in my brokerage account generating all of these tax
Mhm.
consequences. But if I only withdrew like $3 because I wanted a snowball,
Yep.
right? IRS could not possibly care less that I only withdrew $3.
Because you didn't withdraw the 8 million.
Yeah, right. They're not like, well, it's good. It's in this tax haven called a brokerage account. No, 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 no. all of the dividends, all of the interest, and then all of the sales. I could have sold a lot of things. I could have
Yeah.
moved positions multiple times. I could have all in NVIDIA, right? I could
Yeah.
have been selling calls. Like all of that's going to generate, tax consequences that are very significant. But yeah, if I'm, wheeling and dealing inside the account,
We're leaving it there.
regardless of how much I take out, it doesn't matter if it's 5 grand, 500 grand, or all 8 million. Like
Yeah.
that does not dictate the tax consequence. What you remove from your accounts, no bearing, no tax impact, right? It just does not matter.
hmm So then by like the original poster then becomes frustrated.
Mhm.
Well, remains frustrated by the situation because original poster says, look, I have my withholdings at the lowest rate possible, right? I have no dependents or anything like that. I withdrew $5,000.
Sure.
My tax bill is in excess of $6,000.
Yeah.
So if I'm calculating 15% on my $5,000 and it was verified that it was a long-term investment that had been
Mhm.
sold. So the frustration becomes like, I should be fine. And if I'm not fine, I shouldn't be not fine to the tune of $6,000 with a penalty.
Got it.
So
Yeah.
then the next recommendation was, okay,
So
that's
it's
fine.
$6,000 of taxes owed is what they were saying?
Yes.
That's a lot.
Yes, it is. $6,000 of taxes owed. And so the issue became, okay, even if I hadn't liquidated or cashed out some of my brokerage, right? The $5,000, which
Mhm.
you're paying 50% on that, right? Even if I hadn't done that, I'm still paying a significant bill based only on my W-2s, my withholdings. And that shouldn't be that case.
Sure, I do wanna again reiterate because we
Yes.
talked about the $5,000 and the 15% on that. We don't know that it's 15% on just the $5,000 withdrawal, and
Correct.
it's
Because
almost certainly not.
we don't know their income level.
We also just don't have any idea what happened within the brokerage.
Well, correct. But like if you're pulling out, like if your basis is zero and you're
Mhm.
pulling out the 5,000, right?
Okay.
Then you're paying it on everything.
Capital gains on the 5 grand. Yeah,
Right.
sure, but, like, if my basis is 0 and I sold 100K and I left 95 in there and I pulled 5, then there's 15K of taxes owed and I withdrew 5.
Well, correct, correct.
Makes sense.
The
That's where
message,
my head goes, I guess.
no, that's, and I think that's a really fair point. Is that um
Because if they only had 5 and they really only generated capital gains on 5, then, like, they wouldn't be paying that. They'd be paying
correct? Well, so the
$750.
next suggestion that was made on the thread was, okay, you need to talk to your HR and figure out what percent they're actually
Yeah,
withholding
so
because they're not infallible. And you can say, we just talked about,
correct.
you can say I have no withholdings, like I'm claiming no dependents, all you want. Sometimes getting very granular and telling them like, "Hey, I want X amount of dollars withheld," particularly if you're experiencing penalties. Like if you know you're experiencing penalties, you can figure out the safe harbor rule, which is what we had talked about,
Mhm.
and tell your HR, like, because this was a couple, they're married filing jointly. So between the two of them, they can just make sure they cover the tax liability.
Right, you can make your W-4 equal your safe harbor value,
Right.
and just to reiterate what that is, your safe harbor is always 90% of taxes. I dropped my pen again, by the way, I was spoiling it.
Worse.
It's always 90% of current year tax liability.
Right.
Again, that's not taxes owed, that's not your taxes after credits, it's your tax well, it is actually, it's your tax liability,
Yeah.
okay? That means your total taxes that you owe to
What
the
will come out
IRS,
of yeah.
okay?
You're out
So
of
total, tax liability,
Now,
90%.
someone might
That's
say,
always safe.
how the heck do I know what 90% is of this year's taxes?
And then you can go to the other safe harbor
Yeah.
rule, which is 100% of your prior year's
Which you
tax
should know because
liability.
you have done said tax
You
return.
hopefully filed your return for 2022, and now when you're prepping your 2023 return, you just go look at it.
Yeah. Now it's 100% if,
You make less than $150,000,
otherwise it is 110.
110% of last year's
Yeah.
tax liability. Okay, so those are the safe harbors. Just do that, and
Yeah.
you're probably fine.
Because it's not going to minimize your tax liability, but will prevent
There is a
penalties.
way that you could, yeah, there is a way that you could still pay interest if you if the timing of your income stream varies, but
That could
you're
be a whole
almost never gonna worry
episode.
about that, and if you're withholding on your W-4, then it counts as being withheld on January 1st, which means you withheld it the whole year. So you're
So,
fine. If you withhold 100% of your prior year or
okay.
110% of your prior year with your W-4, you're set.
Okay. So side
Also with IRA distributions.
with side hypothetical.
Okay.
Okay. So let's say that it's not until June or July that I realize like Oh, no, I might
I'm
not.
wildly under withheld.
Correct. So I can go to my HR and say, "Hey, I need to withhold," like, you might now know by the end of the year, I need to withhold X amount of dollars.
Mhm.
Up until now, the first half of the year, I've withheld
0, let's say. Let's go with that. Go.
okay, I withheld 0.
Yep.
For the remaining 6 months, I know I need to withhold the entire liability from my previous year.
Yep.
So,
Let's call it 20K.
okay. So then I'm gonna spread 20K across 6 months, right?
Okay.
So if I do that, do I get in trouble because I waited till the second half of the year to do it?
If you're making things like estimated tax payments, possibly, yes. Definitely, yes.
Now, who makes estimated tax payments?
Self-employed people,
There we go.
retirees,
So the majority of
people
people
without
that are
W
out there,
without the ability to
correct,
issue W-4s
correct.
or to
So
sign
the majority
W-4s.
of people would be unaffected by that.
Mhm.
But if you're working W-2 and you fill out a W-4
There's
and go to
also a
your
way for
HR,
retirees to fix it, by the
oh
way.
my God, different episode. No. But if I
Can
go,
we just talk about granular tax stuff
no,
for the next 3 hours, Mitch?
no,
That doesn't sound appealing to you?
no. If I,
What about you guys? Y'all wanna hear it?
no, they don't.
Okay, you're probably right.
If
You're
they
probably right.
do, they can write in and
Yeah,
tell you.
please. Ask us
Uh,
all your tax questions. This is great.
no, don't do that. No, please do that if you really have them, but
Do it.
it would make him really happy. But so if I, though, on like you said, if
Yep,
it's withheld on
20K,
a W
withheld
four,
0 so far.
correct. But if it's withheld on a W-4, it's treated as though it kind of spread the gamut for the year.
It's treated as if it were held on January 1st for all
Right.
intents and purposes.
Okay. So let's say that I end up withholding my entire tax bill in December.
Love it. You could do it on your last paycheck. You could do it on December
If your
31st.
paycheck has enough to
Theoretically,
go,
yes, you have to have 20K coming on your gross last
if
paycheck,
your paycheck's high enough.
net of Social
Um,
Security and Medicare, because that's coming out
yeah.
regardless of whether you want it to or not.
So, okay. So on Facebook thread, next thing was like, go and talk to your HR, see what's going on.
Okay.
So person follows up and responds. HR says, husband's withholding rate is about 10%, wife's withholding rate's about 8%.
Okay.
They make over 150,000.
Combined?
Hmm.
Okay.
Now they didn't specify the amount. It's over 150. It could be 160. It could be 300.
I mean, that seems relatively low to me.
10 and 8.
But and again, we're taking everyone at their word here, having seen 0 actual
Correct. Again, this
documents.
is
I've seen no
all
W-2s,
no. This was
nothing. This
all
is all
very.
hearsay of hearsay of hearsay or
It was a very
just
like
reported back.
yes.
But I mean that seems low. So I I honestly never want to really have to even interact with HR if we can help it.
Yeah.
Let's just do our W-4 and hand it to them.
Yeah.
Like, and the way we're gonna do that is we're gonna look at your pay stub and we're gonna multiply it by the amount of pay periods, right? So if I have $100 of tax withheld on my first pay period and I'm paid
Twice a
twice a
month.
month, okay,
Mhm.
24 pay periods, $2,400 throughout the year.
Correct.
And now I say to myself, they're withholding $100 and my tax is $2,400. Maybe I need to pay $2,600. So I then tell them to withhold an extra $200. I take that 200.
And
I
across your
could have picked a
24
number.
payments.
Let's say it's 240. I could have picked a number divisible by 12 or 24. That would have been helpful. I did not do that.
No, you
I
did
didn't.
not. You did not.
But the idea is you just take this shortage and you
Mhm.
divide it over your number of remaining pay periods in the year actually, so it wouldn't
Correct.
necessarily be 24. And then you just withhold it yourself. Like you take HR out of the equation and all the algorithms. Another point I wanted to make real quick, because most of our audience is in Louisiana.
Yeah.
I want to make this point because a lot of you might be doing your taxes on Free Tax USA, which again, I don't I do not have a recommendation. They don't pay me anything. They don't
Right.
pay us anything. We get no money from any of these guys. It's reasonable to do, right? Like we've used them. It's completely fine, and we have people that do it, and they've been successful. So I'm just vouching for the
Correct.
fact that they are out there and they are a provider of free tax
Correct.
returns, right?
And
So
they're
anyway,
similar to TurboTax insofar as like it guides you through the process.
yeah,
TurboTax is more expensive because they market that if an issue arises, that they'll kind of like advocate for you.
right. They're willing to.
What that looks like in practice.
Right, I have no idea. They might be better. They could be great. I'm just saying that people are prepping their own tax returns, and a lot of people that we've seen prep them are saying, "Wait a second, I either am getting a large federal refund or owe nothing to the feds, but my Louisiana tax liability is
It's
huge,
gotten
disproportionately
so
large. So
big.
I might get like a 10K federal refund and owe the state of Louisiana a grand or
Yeah.
two." And people are like, "What is going on here?"
Right.
The answer to that question is, I'm not really sure.
That's
We don't really know,
it's pretty
but
atypical, but it's been consistent.
yeah, I just wanted to let you know, guys, when you're prepping your returns, you're not alone. Like what's been happening across the board, including for us,
Yeah.
is the federal return has been higher than the Louisiana, right? Like the federal taxes owed, I guess,
They've offset.
proportionate to their
Yeah.
withholdings have been lower. Um, than Louisiana, right? So you're going to owe a little bit more on Louisiana tax. Why that is, I don't know. I mean, we probably could dig into it and figure it out, but nobody really cares.
We definitely could. I think that
It has a lot to do with the algorithms that they're using for what their withholding tables. Like they have little charts that say, if you're here and you're earning this, and you claim one dependent, then we're going to withhold this.
correct, exactly. So that's an important thing to specify. The returns where we've seen that have been W-2 employees with their typical W-4 forms
Another small point
for
there is
Louisiana.
that could also be a factor into that little um, aside is that a lot of people we interact with have children, and so they're going to get child tax credit, child
For
dependent
federal,
care
yeah,
tax credit for the Fed, which is 2K a child, and then like 1,200 for one or more if you're paying up to 6,000 in childcare expenses,
healthcare, yeah.
or 6,000 or more in childcare expenses. So they're going to have, a significant amount of federal credits that they're not going to be able to have in the same way in Louisiana. You'll usually have like stark contributions or federal, like I bond earnings, things like that. But
But that's still pretty
anyway, the
relatively
point is, I just wanted
high.
to let you guys know you're not alone if the federal refund was maybe higher than expected and Louisiana
Yeah.
was lower, or you actually owed them money.
And it's also important to note that, like, if for some reason you find out something later on where you're like, oh my, like I should have done this on my tax return or whatever, like the option to file an amended return, it's still available.
Hmm.
So if you're not sure if you did it correctly, there's certainly a cost associated with it, but you can at least run the return and see if it changes it meaningfully enough to make it worthwhile. So not all hope is lost if you've missed out on your child care
That's right.
credits.
So thanks for listening to yet another episode on
Yeah.
taxes. And if you enjoyed today's episode, please review the show. And if you have any topics you'd like discussed or financial problems you'd like solved, reach out to us at podcast@equilibriumfp.com or visit our website, equilibriumfp.com.
Till next time.
Thanks, guys.